Hello, good morning. It's Tuesday the 30th. I'm FxPlew and this is the market brief. So we're back from the bank holiday. The leadership race is in the final week. Liz Truss has just cancelled a TV interview with the BBC, citing time constraints, but Sunak has claimed this is because her campaign won't stand up to scrutiny. Truss has been under a bit of pressure to confirm if she would consider blanket support for the cost of living crisis, but her preference for tax cuts has been labelled as unaffordable by Sunak. And regardless, whoever walks into number 10 next Monday will certainly have their work cut out, whether they opt for tax cuts or not. Stagflation is where an economy has negative growth while inflation continues to rise. Typically where the central bank tightens monetary policy to deal with rising inflation, it directly contributes to slowing demand, and in turn that leads to stagnated growth. Sounds familiar, doesn't it? The summer lull should be coming to an end, as most central banks get back to business next month. So we could see a little more volatility return to the market. In thinner bank holiday trading yesterday, sterling fell to a fresh low of 116.50 against the dollar, and we opened only slightly higher this morning. We're around 117 against the dollar and the euro, as euro dollar is bang on parity this morning. Over in the US, Powell delivered his speech at Jackson Hole on Friday. He remained fairly hawkish on inflation, and this pushed the chance of a 75 basis point rate hike over 70%. And indeed, that saw the dollar strengthen. Belief that the US could escape a genuine recession was reinforced by Q2 GDP, which showed the economy only contracted by 0.6%. Yes, that is a technical recession following the 0.9% contraction in Q1, but it's hardly noticeable contraction. So Powell might yet be right in his assertion that they will avoid a full-blown recession. Time will tell. Personal consumption expenditure is the Fed's preferred measure of inflation. That was out on Friday, and it showed the rate of increase had slowed. Month-on-month prices fell by 0.1% in July, and that was after a 1% increase in June. So it'll be interesting to see if any of the Fed members vote for a 50 basis point rate hike on the back of that. But it seems like Powell wants to crack on and get the job done, as hikes over the neutral rate should cut deeper and have a bigger effect on inflation. The hawkish comments and the expectation of a 75 basis point rate hike pushed the dollar index to a high of 109.25 last week, and then yesterday, in thinner market conditions, we challenged 109.50, but we ran out of steam slightly and we closed the day around 108.70. Right, that's it from me. Hope you have a great day, and do join me again tomorrow.
If you do not have a clue, then just tweet through and ask FxPlew.